Hey there. For beginning, myself and Paul just want to remind you that everything discussed here isn't a substitute for formal investment advice and does not represent the formal perspectives of Aquarium Investments. The content of the discussion will hopefully interest you, entertain, and supplement your own perspective, but it's important that you conduct your own research or speak formally to a financial advisor before taking any risk with your money. Having said all that, we hope you enjoy the discussion and let's dive in. How are you doing?
I'm doing fine. How are you, my friend?
Yeah, I'm good. I know we were chatting a bit offline, and that I'm on a bit of a detox after all the US election cycle stuff. Yeah, it's been
You're not alone, I don't
eh,
think.
I know the whole world is on detox, but I'm particularly, and I know everyone has different opinions on it all and everything that's played out. I tell you, I haven't been glued to an election cycle ever. I think like this, like the US election cycle, not even Irish local cycle. So yeah, so I've like, tuned out of Twitter. I've tuned out of, I use Reddit sometimes. I tuned out of Reddit. I've tuned out of all these articles and newspapers I was following. I'm just like, I need to switch off from this. So yeah. How have you managed it? How have you got around it?
I actually wasn't following it as much, the actual election process, because, typically I would look at polls and stuff like this. But, I had a pretty good conviction. I think we've discussed this with you. I kind of felt that it was Trump, so I didn't follow it really. I was also expecting for the vote counting to go on for much longer, so that was a surprise for me,
Yeah.
the sweep and all that.
Yeah, well, we're going to get into that, I think, today. We're going to discuss the implications of the result of Trump being the next US president in terms of the markets and economics and I'm going to touch maybe on some social stuff as well, just to, what way kind of impacting the social global landscape, maybe you could call it that. I don't know, there's
You
probably
could.
sociologists out there saying no, there's a correct term for this, not the one that this idiot is using. But yeah, I
There are
know we're going to
always
touch.
there are
Yeah,
always
yeah.
sorry, there are always critics out there,
There's always critics, exactly. Yeah, but I think we're going to touch on that a bit today. But before we get going, we just wanted to say off of the previous episode we did that we got some really excellent feedback from family and friends, all the nice people that we shared the podcast to, and yeah, just some fantastic feedback that we're going to try and implement going forward. There was things about length, there was things about topics, charts, so on. And I've taken a big long list of it, and myself and Paul have been reviewing it. And yeah, we're going to iterate going forward, and we're going to try and implement some of that feedback and hopefully make this podcast even better and improve it. The plan, roughly going forward from our discussions, is that we're going to aim for, I think it's 2 months a cadence is what we're going to try and target. So a podcast every 2 months. Am I right, Paul?
Yes, this is correct.
Yeah. So 2 months. Maybe that
Unless
might change.
unless something dramatic happens, then we could do something in
Yeah,
between.
exactly. If there's a meteor heading towards the Earth and the markets are suddenly wobbling, maybe we'll do like a sudden podcast just to fix
Maybe
things up.
maybe a
Yeah.
bit late for that,
Yeah,
but
yeah.
okay.
Just to tide people over. So yeah, so we're going to aim for that, and then roughly a 50-minute to hour-long podcast is what we're targeting here. We've both Paul and I have a tendency, I think, to chat. We like chatting and talking.
This is true.
Yeah. So, I mean, even all our calls leading up to the first podcast, it was like an hour plus easily. And, I had people saying to me, why don't you just use those phone calls as a podcast? So,
No, no, we can't do that. Sorry.
no, no, no. So we're going to try and keep the time to a nice length. Potentially, we're going to bring on guests in the coming episodes as well to talk about different topics, get, expert opinions on different ideas and debates on that stuff. And then furthermore, if there's anyone that has any topics or any opinion or anything at all, actually, that they just like, opinion from Paul or even myself on, we'd be happy to review them. If you'd want, you could include them in the YouTube comments, for instance. That's probably the best place to do it. Or you could email Paul on his Aquarium email, and I'm sure he'll get to it and we can feature it in an episode. And then the final thing I just wanted to mention was that I know a few people were wondering about what platforms we're on, and we're on YouTube now, and we're also, I believe, we're on Spotify and other streaming platforms. Am I right in saying that, Paul?
Yes, yes, that's correct. I think we'll add these links to the YouTube video.
Yeah. Okay. So today's the 14th of November, and on today's episode, what we're going to discuss is, as mentioned, as we kind of alluded to, we're going to discuss the U.S. markets and what the impact of the of a Trump second term is going to have, or what it's going to look like. And we're going to begin off, I think, by Paul just reviewing some of the key areas that we talked about in the last podcast, and that's kind of going to be a theme, I think, going forward that Paul's going to review from the previous podcast where things have gone. So yeah, we're going to start from there and we're going to delve in. Is that fair,
Yeah,
Paul? Yeah.
yeah, that's absolutely great. Yeah, so this section, I think the idea is to look at key market assets as, I define them, and to keep it going in every recording that we do so that, it's a good way of keeping track and, comparing what we said and to what has actually happened. So all these charts, they kind of cover the price changes since our last recording. So it was 13th of September, I think, when we did our last one, the first one and the last one.
The last one, yeah. Hopefully
Hopefully
not the last
not.
one. Yeah.
Hopefully not, yes. So, and let's start basically. So the first chart is a DXY chart, and it's a dollar index chart. And dollar index is just a basket of currencies with a heavy weight of euro, which is the biggest weight in the index, and yen is the second biggest, but there are others. And you can see how relentless the upswing in the dollar has been. So it was at 101 the last time we talked. It's around 107 today. So it might not sound like a big change, but in the currency world, 5-6% of price change is a big deal. Typically, volatility for currency pairs like euro dollar, 5 to 7% per year. It's a big change. And you can see how it accelerated after the election. So obviously, the market sees Trump winning as dollar positive. And, dollar and its price, it has huge consequences for virtually all asset classes and also for some US corporates like Microsoft, for instance, that derive a large part of their revenue from overseas markets. So I would say it's a function of US interest rates. We'll touch on them a little bit later. And I think the dollar move is basically on the back of the rise in longer term interest rates in US. And I think it's a good time to look at those. So the US rate curve, again, we're using our last episode's date as a cutoff. So the blue line is the rates curve on that date, and the white line is the curve today. And you can see that it's very different, right? So it's much flatter, which I think is important. But the most important thing is that rates after 1 year have actually spiked despite, the Federal Reserve lowering rates, lowering the Fed funds rate. So, and I think the reason for that is because the market is expecting Trump to be a debt guy. I think the basic belief is that he'll issue more debt, and that's why the market is pricing in more supply and requesting higher rates for more issuance kind of thing.
So when we're looking at this chart, when was it you think they started predicting this coming, that Trump was going to get in, roughly? Do you think it's priced in here in the chart?
Well, so these two lines, they basically show you two dates, so the white line is today, is how it's looking today, the curve.
Right.
And the blue line is for 13th of September. So they're just comparisons of two dates and how the curves looked at those dates. So this chart doesn't actually show you when it happened.
Right.
It just shows you the end result kind of thing. But it did start moving a little bit before Trump.
Started looking promising.
Yeah, because the odds were pretty high, right? And you were following that stuff more than me. So, yeah, and the market started pricing it way before. But some of the move happened after the election. So, and yes, like I said, I think it's the primary reason for the dollar rally because the interest rate differentials are in favor of the dollar. And if you expect more, so the market is pricing it before it actually happens. Okay, so we can move on to gold. And there's a lot of talk about gold, especially in the context of the pullback. But actually, if we look at it from our point of view, it didn't change much. We're pretty much at the same level as the first time we recorded. For me, it's just a pullback. We are still bullish gold in a big way. And for us, I think it's somewhat of an opportunity, but it's also related to the dollar, of course. And, with the dollar, coming back to it a little bit, I sometimes joke, I say that there's only one trade out there in the market, and it's either long dollar or short dollar, and the rest of your exposure is just the derivative of that trade.
Mm.
And I actually believe that, So, and this illustrates this in some way.
Well, you see this pullback that you're talking about here. What drove it up to I think if we look at the chart here, you go to around 29th of October. So where that kind of big spike in the mound is, what drove that climb for a layman, for someone like myself?
Well, gold has been going up against all currencies for a long, long time. Even with this pullback, the latest one to the downside, was still up maybe 20, 25% on the year. So at the very top, it was probably closer to like 30 or something. I can't remember the exact percentages. But, it had a good rally. And the reasons for that, we kind of covered them last time. But, I think the main reason, and not just this up move that you're talking about, but generally, I think what we're seeing is a substitution process of US Treasuries versus gold. I think
Mm.
that's what's driving it mostly, and the expectation of issuance, more money coming into the system, more liquidity coming into the system. Gold is pretty good at predicting that, and I think that's exactly what's happening. I would also add that, in a bull run like we're seeing with gold, guys like me, we kind of expect this volatility, because it's very typical. It's kind of historically valid. So, and volatility implies that there will be moves both ways, so like you have to be ready for this basically.
It's I know we don't have a chart for it, but and maybe we'll touch on it later, but I know Bitcoin is like the polar opposite, right? It's just completely doing the
Yeah.
counter to what gold has done here since the last month, really.
Yes.
I often found really interesting because I know during COVID, like Bitcoin was this really, really pushed as this thing that was going to be the global common currency and everyone was going to be in it and there was so much hype around it, but that it would act as a hedge against the US dollar. And I know this argument was going on for ages. Would it be the hedge against the US dollar? But then it has just followed every opposite trend to gold since then. And that included like significant falls or significant rises. Bitcoin has just done the complete opposite. But maybe for another discussion some other time. But I know there's been a
Yeah.
lot of talk about Bitcoin right now and how that's comparing to gold.
Yeah, it's been mooning, right? That's what they call this type of rally. Yeah, I don't really agree with this whole debate of gold versus Bitcoin. It's something that's been brought up a lot. And, but I would say that they're completely different assets and types that like they don't correlate that much. The argument is that both are of a limited supply, right? So gold is of a limited supply and Bitcoin is supposedly of a limited supply. So that kind of makes them scarce, but their properties are very different. I would argue that Bitcoin is closer to tech stocks than gold. It's definitely not a currency. You can't have a currency with this kind of volatility because, you want to buy something, you walk across the street and the price is different, right? So it's very difficult to use it as a currency.
Maybe we should do that. We should have a podcast for Bitcoin and then we can come out with one every like half
Sure,
hour as the price swings.
we can. I have a bunch of friends that are very active in Bitcoin and I have nothing but respect for them. They're, smart people, very successful. So I'm not against Bitcoin in principle. I just don't like it being compared to gold because I just don't think it's academically valid, so to say. We'll touch on Bitcoin because Trump was big on Bitcoin, right? So there's a basic question out there why, because he was kind of critical of it before, but I think we'll talk about it towards the end. Okay, let's move on. US stocks, S&P 500 and Nasdaq. Again, nice rally since we last spoke. Again, we can see this push after the election. I guess the main drivers in the context of Trump winning were his promises to cut corporate tax and promises of deregulation, which especially impacts, industries like regional banks, oil stocks, things like that. One thing I would add, though, is that valuation metrics were high even before the election, and now they have been pushed even higher. So theoretically, it's a problem. And also, concentration in stocks is still a big problem. Both indices are driven by these big corporates like, the Magnificent Seven and all those. So I think it's a good time to be cautious. But, I've been wrong about US stock indices before, so maybe not. WTI oil, let's look at that. Again, a lot of talk from Trump about how he's going to drill, baby, drill. But again, it's pretty flat, just like gold since our last talk. And I would add that generally oil has been moving in this wide range of 70 to 90 for the past year and a half. And 70 seems to be some kind of a floor. There are reasons for that. There are good reasons for that. But again, I think it's a separate topic that requires a separate chat. So maybe in the future, we'll focus on that for at some point. And I want to finish off with emerging markets. So here's the chart of emerging market bonds, a little bit lower, but not much in percentage terms, which is kind of strange because you would expect a much bigger move. And I would also add that emerging markets is a kind of a vague concept because, for instance, China is considered to be an emerging market, but I have a hard time, assigning them in that bracket.
Why is that? Why do you say that?
Because it's kind of developed, right?
Yeah.
In terms of technology, in terms of the size of the economy, in terms of what kind of tools they use on the monetary side, it's exactly the same tools as the Fed uses and the Treasury. So, but especially technology, because when people say emerging markets, they typically mean some kind of oil producer or, some country focused on minerals and something like that. China is not like that at all. They're actually a consumer of all these resources rather than the other way around.
So maybe it should be a partially emerged market or something like that. It should be called because I know we talked a bit last time about AI and stuff like that. And every time when you look at technology, China are there, and obviously they have all the industrial power now, and everything that's made is made in China, and they have so much behind them. But they are obviously well renowned for copying IPs rather than innovation at times. And that's not to say that you don't get much innovation from China. I know electric car industry is booming in China, and I think it's coming into Europe as well. I hear Chinese cars are just taking off across Europe, but maybe they're always a little bit behind the US in terms of innovation.
It's a valid argument. Yes, it's a very difficult argument to prove, though. It kind of depends which technology you're looking at. And, there's a lot of stuff going on in the chip industry, as you know. In terms of stealing property, I think everyone does it, basically.
Yeah.
So why wouldn't you, right?
Yeah, yeah. Look, I'm not going to be the moral arbiter of that discussion.
Yeah, I just think you have to stay objective, right? It's either you have this critical technology or just any technology, or you don't. Whether you've stolen it or you developed it, well, it's important, but it's kind of secondary to me. But I would say generally, I don't see China as as an emerging market. It's closer in its characteristics to a developed market, I would say.
Okay, that's fair.
And also this whole emerging, developed kind of breakdown, it's very arbitrary. I mean, it doesn't have an academic kind of definition.
Yeah, it's just labeling again. It's just the perspective, is what you're
Yeah,
saying.
yeah,
Yeah.
yeah. Yeah, and we'll finish off with the emerging market stocks. So, I share some MSCI, emerging markets ETF we're looking at here. Again, higher dollar, Trump winning, kind of brought it a little bit lower. We're at the same place where we were when we recorded last time. So, some action, but at the end, yeah, so feels like reversion to mean kind of thing. So just to finish off this part, as a general comment, I would say for me, there's a clear sense of euphoria in the market right now and kind of a linear extrapolation of expectations, which are very loosely defined, right? Because whatever Trump says, and even with the sweep, the majority in Congress is kind of marginal. So it's unclear how many of his promises are actually possible, but the market is behaving as if it's a given, which is strange to me. And this kind of price action is always a bit of a red flag for someone like me. So I think it's a good time to be cautious. I was actually giving a lecture a few days back, kind of on similar topic, and one guy asked, when do I sell my stocks? And I said, well, I don't know when to sell, but it's a very good time to be cautious because of this type of action and because the valuation metrics are so high and kind of priced to perfection. What does it mean for us as a company, as an asset management company? Well, these moves are not great for us because we generally pursue a short dollar approach in a general sense. So we're long precious metals. We're long various miners, various emerging market companies, long emerging market sovereign debt. So it's not a great few weeks for us, but we had a good run, So, and if you were to ask me whether this election does it change our approach or positioning, I would say that strategically, no, because we base our approach on the reality of US fiscal situation, twin deficits in US and ever increasing debt. But on a tactical level, I think this price action provides us with a bunch of opportunities. So I always try to find positives, And these moves are not that dramatic for us, but like they're negative for us, more or less. So I would also add that I think there are good reasons to expect pickup in volatility across all asset classes. So I think the type of price action we've seen in the past couple of weeks is something we'll have to get used to in the future. And I think the next 3 to 5 months will be very important in that respect.
And you're just basing that on the wake of this US election. That's kind of where this perspective on volatility is coming from. Am I right?
Yeah, I think it's like a trigger kind of thing.
Yeah.
So yeah, I think that's the trigger. And like, because if Harris would have won, you kind of know the drill. You kind of know what kind of policies will be implemented, more or less. Still questions, but less so. With Trump, he can wake up tomorrow and come up with some other ideas, and also the question of, because I think he overpromised a little bit. He's a showman, he talks a lot, like we will cover this, but he gave a lot of reasons to vote for him in an economic sense.
It'd be unheard of for politicians to do that, right? It'd be very strange
I would say it's impossible for them to do that.
to overpromise.
Well, not to over deliver.
Don't know if you can pick up on my sarcasm here, Paul.
I can, but I still want to make a point that under delivering is typical, and with these kind of moves in the markets, I think there is space for, the reversal of these trends kind of thing. I also think that some of his promises are virtually impossible.
Okay, we'll touch on them then coming up. But yeah, that was a really good breakdown. I think we're going to make this a kind of feature of all the podcasts going forward, that you're going to give a description like these on these various movements in the market. I think it's a really useful exercise as well.
Are we adding Bitcoin then to the list?
We could, yeah, we could add
I
Bitcoin.
don't
It's
think
not
of it as a critical part of the system,
maybe for
but
the memes or something, right? Just for the
all
meme,
right.
we'll add
Okay.
Bitcoin. Yeah, yeah.
Let's do
And
that.
maybe it's just like I don't know, you're a bit older than I am, and I'm an old soul, so maybe we're just out of touch with like what the next thing is and Bitcoin. I know a lot of people in my generation and younger who are like, Bitcoin is the thing. So maybe we need to get on that.
Yeah, I'm open to anything. I mean, if you think it's a good idea, we should maybe our listeners should tell us what we should add.
Yeah, do that actually in the comments. Do that. Tell us whether you want some Bitcoin analysis as well. That was very good. So maybe we'll jump in now onto the US stuff, the US
Sure.
results. Yeah. Yeah. So obviously, spoiler alert, Donald Trump won, in case you've been under a rock for the past 2 weeks. I was saying earlier, it's probably like the most glued to an election cycle I've ever been. And I'm not like, we're not going to give any perspectives on policies, like in terms of, whether a policy is right or wrong. I think there's so much debate about that going on right now, but there's definitely some takeaways from this whole cycle of an election, which was absolutely fascinating to me and reflected like a general trend across the world in terms of how societies are behaving, people are behaving. And that has implications, I think, in my opinion, on how we approach everything, how we approach markets, how, guys like you, Paul, in this industry, how you approach investing, how, people who are dabbling in markets, how they approach it as well. And a lot of it comes back to, how the data was moving around during the cycle. And I found it like the most interesting subtext to the election was this kind of the polling process, the betting markets, and things like that. And I mean, in the lead up to the actual day, right? I was on this, like, I was online. Some nights I was on until like 3 in the morning, just like following what was going on in terms of polling, in terms of betting markets, in terms of people on the ground, what they were saying. So I was really glued to it. And polling data, for instance, coming out in the lead up to the US election, I think it's really useful for people going forward into future elections that they think about this stuff that, polls, for instance, people can cherry pick polls and say one person is ahead or one person is behind, and you can kind of enforce narratives that way. And for anyone that's minded to, wanting to get the actual information and the actual truth of what's going on, because maybe they've got investments or trying to position themselves in some certain way, or even they're just passively interested and they kind of want to have a better understanding of what's going on. It's like, you need to, I've learned from this election, you need to be careful actually in what narratives you're reading and what information you're getting. And for instance, like polling data in the lead up to the election, Trump was ahead in all the polls basically for like 3 weeks, and this is some of the top polling agencies in the US. There's Atlas Intel, Qantas Insights, Emerson were another one. And then, a couple other big ones as well, all had Trump ahead in the battleground states leading into the election, in Pennsylvania, Michigan, Wisconsin. And then, he was miles ahead in Georgia and Arizona and so on. So if you were, thinking or following those things, you would have had a pretty strong inclination that Trump was leading, rightly or wrongly. He was still leading. And then it started coming close to it, close to the actual election. And I noticed a lot of people started getting a bit more nervous. And I even, I started watching main established media stations like CNN and things like that. And I started getting kind of nervous because they were saying, oh, Harris is in perfect position here for a win. And I was saying, okay, maybe the polls are all wrong. How can we trust data here if the polls are all completely wrong? And then it ended up being the case that was a complete falsehood. And it's like a really interesting insight into human behavior and narrative that's happened this election because there's this guy, Alan Lichtman. I'm sure people have heard about him. If you haven't, he's this professor of I think, sociology or politics or something like that in the US. And he's called the Nostradamus of elections, of election predicting. I think you've heard of him, Paul, right?
I have heard of him. I don't like his nickname. It's kind of meh.
Okay, well, either way, he's got the nickname, and
Yes,
maybe
yes.
not any longer though. Maybe it's gone now. He's kind of. But anyway, he's got this set of keys, and these keys are like a framework for how or for who's going to win the US election. And he had this framework and he said, okay, well, on this basis, this president is going to get elected. There's like whatever, 14 keys or something like that. And he had this prediction that Harris was going to win the election. And people were saying to him, hold on a second, you're not applying your keys correctly, you're not applying the analysis correctly. And right up until the election, and even in the wake of the election now, he's still adamant that the keys, or no, he's thrown the keys out. So he's saying that the keys are completely wrong because he got the election guess wrong. But he's completely ignoring his own preferences and biases and how he applies the information and the data that he had. So, I mean, that's a guy that's been in this industry of politics and predictions and so on. And he's, letting his own perspectives kind of shroud his very strong framework, to be honest, for election prediction. So I think the biggest learning for me is that, there's been a lot of narrative spinning around, but we're in this new age of information where you can get information from direct sources, from like if I go on X, for instance, I'm talking to the guy, the leader of Atlas Intel, like the top polling agency in the US, and he's directly talking to me and he's saying, oh, the data is representing this. And I think we've entered this new age of information that people kind of haven't fully grasped yet. And you see a lot of media organizations pushing back against this stuff right now, saying that, oh, it's dangerous that, there's all this free information going around. But I think it's just more important than ever that people recognize that, okay, this is the world we live in. The internet is so prominent, information is so freely available. I need to actually, listen to as many good sources as I can rather than listening to narratives. And this is particularly important with markets and, trying to predict where things go because, if you're basing your opinion on narratives and your bias, you're probably going to get burnt in some sort of way. And so, yeah, it's just been absolutely fascinating to me on that basis. And I mean, the Iowa Seltzer, I don't know if you followed that. Iowa Seltzer poll came out in the lead up to the election, and this Iowa's like been
That was
predominant.
the biggest fail of
Oh my
this.
God, it was just crazy. Like this Ann Seltzer, so she's very reputable, from what I understand, in polling,
Very.
and
Used to be.
used to be. Yeah, she came out with a poll. So Iowa, for explanation, is predominantly red for the last few years, like a Republican-leaning state by a percent, nearly double-digit percentages. And then Ann Seltzer released this poll, which swung Iowa to the Democrats by a margin of 22% since the summer. And suddenly the whole betting market, it was crazy watching it. I was watching this. The whole betting market just fell into the ground, just went way down.
Mm,
I mean, Trump had been ahead in the betting market by like 15, 20%.
yeah.
And suddenly they were even again. And like everyone that was
Holding
looking,
market, yeah, you're
the
talking
poly
about.
market, exactly. Yeah. But I think the other ones as well. But like everyone that was following the
I
numbers.
think I'm sorry. I think Polymark is just the biggest one in terms of volume
Yeah.
of bets.
I think you're right there. I think you're right there. But it was just funny that the people that were following the data as it was coming out and trying to parse the information as it came out from good online sources like people on Twitter that are actually doing the polling on the ground or people people involved in the campaigns. People following that data were generally pretty okay. They were like, oh, I'm not too worried about this polling. It's not going to affect the betting for me or anything like that. But people that were listening to CNN or MSNBC or whatever mainstream sources were, they were suddenly rattled. They were like, oh God, I could stand to lose a lot of money in this betting market. And then the whole campaign started to wobble. And so, yeah, so I guess the long and short for me from this whole election has just been like, you need to spread your information where you're getting it from, and you need to have as many sources as you can,
Yeah,
which is a bit contrary to what The Guardian announced yesterday, which is that they're pulling out of using X because they don't like the platform anymore. And it's like the entrenchment is a little bit of a worry, with people. So
yeah. Guardian out of all
yeah,
publications, right?
yeah, yeah,
It's funny that they think it's a problem for X users. X users just cheered it.
yeah,
They loved it. So it was meant to be a problem, but it was actually a win
yeah,
for X users. I would say it's very naive to try to censor the internet. And in that respect, I think it's this election, it was a step in the right direction. because basically your mainstream media lost this election despite all the pushes, despite all they tried, you know, rightly, wrongly. So yeah, I don't think it works. You close one outlet, two more appear, and it's a never-ending story. Like if you think about it, Trump was banned on virtually everything.
Yeah.
YouTube, Twitter, Instagram, Facebook, everywhere, you know.
Yeah.
And despite all of this, it happened, right?
Yeah, but I mean that is fascinating because it's like a reflection of the humans I fundamentally believe are all part of the system, and the system finds a way to adapt to best represent the behavior of humans and what we need.
Mhm.
And I think you're 100% right, and that if you're trying to censor the internet or trying to censor data and censor information as it comes out and present only narratives, the system that is humans eventually rejects it in some way.
Yeah, I think for me, it's an evolutionary kind of thing. I think I've told you this. I'm a big believer in evolution of, you know, everything pretty much, living organisms, societies, structures, social structures. So we still evolve, in a weird kind of backwards way, but we we still end up with better systems in the end.
Mm.
And I think this is a sign of this, in practice, in reality. So for me, it was very, very uplifting, I would say, that it actually happened. And, even if he hadn't won, I would still see it as success in that respect.
Yeah, that's the point, isn't it? It's like whatever, if you don't care, look, if you park Trump policies, Trump park Kamala Harris policies, Democrats versus Republicans, if you'd completely put that aside, it's just a win that the free market of information kind of is triumphing at the moment, and we're entering this kind of new era of how data gets around and how like established media organizations are maybe a little bit redundant in how they portray information. I think I agree with you there. It's like just a win for people,
Yeah.
win for humanity and democracy and people.
Yeah, so that's a big part of it. But I think the biggest reason why Trump won is the economy, because what we have in US right now is basically two economies, one for the guys with assets and one for the guys that have nothing, and they're drastically different pictures because for the guys with assets, and let's focus on US, right? So, your house went up in price, your portfolio went up in price. You actually doing very well. If you look at your, total net worth or total wealth, it's a pretty good place to be because prices are so high, despite the inflationary pressures and, high prices in for groceries and in shops. But if you don't have that, you're suffering immensely. Your wages are not going up as much as the prices in the shop, and you don't have any assets to lean back on, to kind of rely on. And I think that's the bigger issue. I think the not haves have voted for Trump because it's, like the saying, it's the economy stupid. Well, I think I think that's what it is. And it kind of brings us to this big question of what kind of economies Trump and his cabinet are inheriting. And there are a lot of problems out there, and you have clear trouble in the labor market. The latest report was very bad, like the worst in a few
Yeah, I
years
saw
for
it.
sure.
It was like it was a shock a few months ago because they were down and then they had less jobs than expected. In the last 2 months, a positive one came out.
Yeah,
And then on the weekend of the election, suddenly hidden behind all the election news was a terrible announcement in terms of the labor market, right?
yeah, it was very bad. Yes, I think that's one of the bigger reasons why the Fed is cutting rates as well, because it's part of their mandate, and the problems are clear. The problems in that data are clear. I also think that manufacturing in US is not doing well. It's been in contraction for some time. We obviously have huge twin deficits, ever increasing government debt, indebtedness of consumers, credit cards at their peaks, credit card borrowings. Even with all of that, the US economy has been influenced by all these transfer payments, various subsidies, And it's actually what has been keeping the economy in a positive momentum. So, and I think in my mind, it's the biggest problem of the new president because, it would take some sort of magic to fix this stuff all at once. I would say it's impossible to fix those things because they're kind of systemic things, you know. What do you think? We could go into Trump's promises. What's your
Yeah,
take? Shall
yeah,
we
we
do
could
that?
do that. Yeah, let's do that. I think it's what you're touching on there is just so accurate in terms it's like inheriting a problem that is just fundamentally part of the system. I mean, I was reading there last night about the debt ceiling, the US debt ceiling, and how often it's been raised. And I mean, Bush, or Clinton before Bush, was it Clinton before Bush or Bush before Clinton? I can't remember, but Clinton raised the debt ceiling 8 times in his tenure, and then Bush raised it 7 times. I think before that, it had been raised 29 times, and in the last few years, it's been raised 14 times. So they're just constantly kicking the can down the road, and it's just a systemic problem. And eventually, you have to say, well, when does the can hit a wall, and when do things actually start going wrong? I was listening.
That's a very difficult question.
It's a very difficult question. Yeah, we're not going to answer that, but I know I was listening to a podcast there that Grant Williams podcast with David Moran that you had actually sent me, and it was I think it was David Moran. It was an interesting discussion just about how inflation is just it's this release valve for the U.S. economy, and the Fed and so on. Instead, they don't let the release valve happen, and it's kind of just like building up this pressure cooker in terms of system problems and debt and so on. I think you're very right there when you say it's like which president or what is the president inheriting, and it doesn't matter if it's Donald Trump or it's Kamala Harris. They're both inheriting something which is kind of quite problematic.
Well, it's on the surface, it's doing okay, but like I said, it's very split in terms of society, in terms of different parts of society. And I think it's been kind of a lipstick on a pig type of thing because you can see this. You mentioned labor data. Like one of the things that has been consistent all through this election year was, post good data and then revise it lower in the next reading. But by that time, nobody cares, you know. So, so you kind of make it look better and then roll it back, and you keep doing that all the time. So yeah, on that we actually have a chart. We have U.S. total outstanding debt, and we are almost at 36 trillion. I'm pretty sure we're gonna hit it this year. So, and it doesn't look like it's gonna roll over, right? I mean, I'm sure we'll be talking about debt ceiling at some point in 2025, and they're gonna raise it. Trust me.
Yeah.
It's not, it's always this kind of clown show. They have these hearings in the Congress, and but it's all a show, It's just to give you an illusion that they know the problem and they're working on the problem. But if you just objective and look at, the historical rise in debt, it's obvious that it's all coordinated, right?
Yeah. Well, maybe it's no harm then that we talk about some of the policies that Trump was proposing and whether they'll actually what impact they will have, whether they're going to
Yeah. So I think my biggest kind of problem with his promises is the taxation side of it. And we have a chart on surplus deficit for fiscal year 24 from CBO, the Congressional Budget Office. And it basically shows you receipts on the left side and the expenses of the government on the right side. And it shows you a deficit of 1.8 trillion for the year, for the fiscal year. And if you look at the taxation side of it, most of it is individual income tax. Corporate tax is actually not that big. It's only at about 100 billion,
mm.
which is a lot, but in the context of the deficit, that's like one fourth of the total deficit.
This chart is super, to be honest, Paul. It's like actually incredibly useful to look at.
Yeah, yeah, it kind of shows you, and I think the right side is important as well, the outlays, because you can see that the biggest outlays are Social Security, health and Medicare, interest on debt, and national defense, so the defense budget. So out of these, the only one that could be cut and Trump promised to decrease the budget deficit. I would say it's the net interest because it's influenced by the interest rate. So and also it's worth keeping in mind that 25 is a big year for rollovers of sovereign debt, of US government debt. So I think we've covered this last time. There's a wall of maturities coming in, and it basically means that if current rates stay the same, say they're at around 4% or something like that, a little bit higher, it would mean that these, trillions and trillions of debt would have to be rolled into debt that is much, much more expensive, twice as expensive. So the average kind of coupon is around 2.5, I think, right now. So, but obviously, if you cut rates fast enough, you could decrease the net interest. And that's something that I can easily see happen. But others, defense, really, in this world,
Mm.
I just don't believe in that. Medicare and health, well, I don't know. I don't see it. Social Security, definitely not. So I think, in terms of spending cuts, I think it will be very, very difficult. I'm sure there is fat to trim, but is it going to be influential enough to bring the deficit down, especially when Trump is intent on cutting taxes, which obviously decreases your receipts? It's very, very debatable, I would say.
So his idea here, obviously, is, because there's a bit of fear in Ireland, and I've seen articles in Irish newspapers on this recently about our elected party and probably going to be re-elected primary party in the upcoming Irish general election, making plans for FDI leaving Ireland and returning to the US because they're going to drop the corporation tax. This is Trump's intent to drop the corporation tax and pull back in companies and then pull in the income from there. Do you think that's his idea potentially, that it's like he will offset rather than chop down the huge outlays in your chart, he's just going to really lean on the receipts and try and balance it that way?
I think his approach to taxes worked pretty well the last time he was president. I think he believes it will work again. In terms of actual reductions, I think his goal number one is to keep the corporate tax where it is because, like, the previous arrangements are running out in 25, as far as I remember. So it's just keeping that level of tax. But there is some talk of decreases to 15% or something like this.
Yeah, that would match the Irish corporate tax rate if it went down to 15%.
Yeah, so that's possible. Whether it competes with Ireland, I'm not so sure because companies that have their offices in Ireland, they're there to work in Europe, right? So they kind of have to have this set up in Europe anyway. And the reason why they choose Ireland is because of the language, obviously, the cultural ties, and tax is a good motivator, but it's just one of the motivators, I think, for guys like Microsoft. I think it's not the biggest motivator. So I'm not sure if it's a big deal for Ireland in that sense from the tax cuts point of view. But of course, some might leave because of that, I guess. I think the plan is to finance the tax cuts from rising tariffs in trade. And tariffs are really a form of taxation if you think about it. It's the tax you pay for doing business in US kind of thing. But it's very difficult to imagine this because any kind of increases in tariffs would lead to similar action on the side of your trading partners. And we could actually look at some of the charts in this context. I don't actually, like, to be clear, I don't believe they will pay for it. So, I
Who's
don't
they?
believe that.
Sorry,
Yeah, yeah. So tariffs, I don't think that increases in tariffs will be able to pay for the tax cuts. I just don't see it
is
happening.
the idea with the tariffs, though, I mean, there's again another whole other discussion away from the markets, but the idea with the tariffs, I understood, is to try and increase industry in the US and try and increase employment that way. try and, prop up the job market a bit more rather than relying on cheap labor in China or wherever else. Is that not the primary idea of the tariffs?
Yes, that's the idea of Trump.
Yeah.
So his idea is, you either produce in US for local consumption or you pay the tariffs. Right. So yes, in that sense, it's this MAGA build at home, make jobs, create jobs at home kind of story. But, there are reasons why Chinese are not producing in US. And the basic reason is because they can't produce at competitive prices. Their costs are so high that it's cheaper to produce in China and to, transport it to US. And, if you go that way and force companies to come, well, first of all, they might not come. They might just stop trading with you.
Yeah.
And second of all, if they do come, the products they produce are going to be way more expensive than they used to be.
Yeah.
And so, it's one thing to say, I'll raise tariffs when you are buying stuff that is easily substitutable, I don't know, whatever it might be, wheat, for instance, or something like this. Nothing, not value added stuff, not kind of high end stuff. And you are exporting critical stuff that cannot be replaced. You're basically in a position of strength. And it's quite another when you don't have that position of strength and you're just saying, well, you produce your laptops here, or, you pay tariffs. You know, the reason why Americans are buying Chinese laptops, and for instance, the reason why Apple is producing in China, manufacturing in China, is because of the costs and competence too. So, it's easier said than done. If we look at the trade totals of US, I have a couple of charts. So, like these are the numbers for total trade. So basically exports plus imports. And you'll see that top three trading partners are Mexico, Canada, and China. And Mexico and Canada are literally neighbors. They're in NAFTA, so all sorts of special arrangements. There are a lot of companies building on the border between Mexico and US, for instance, and then selling in US because of those arrangements. So and they're like the closest trading partners in, proximity sense. So it's very difficult to kind of change the ways of trade. And then if you look at the deficits that US has, and I mean trade deficits by country, you'll see that the biggest trade deficit is with China, and then it's Mexico and Canada again. So I guess most of the tariff ideas are aimed at China rather than Mexico and Canada, right? It's a well-known kind of enemy number one. And I mean, I think they actually adopted it in their official kind of strategy. I'm not sure what it's called, but that's who they're aiming for. If you look at, and I have a chart on this, it's a chart for 2022, though, so quite dated, but it's still very similar today. So if you look at US exports to China by category, you'll see that, foods and so, things like soybeans, corn, all types of foods is a big part. It's the biggest part of their exports. And the second largest one is crude petroleum, well, probably not the second largest, but fairly big as well. Petroleum gas, basically energy in different forms. So these things, they are not value added high end things, right? And this is the stuff that the US is sending to China. And if you look at what China is sending to US, it's the other way around, right? It's computers, broadcasting equipment,
Oh, yeah.
machine parts, electric batteries, like the biggest part of it is actually value added stuff, critical stuff. You can replace it theoretically or you could build it at home, but not at the costs that Chinese can do it. So by definition, first, Chinese could retaliate easily by just not buying some of the stuff US has to sell, specifically, soybeans and corn, because easy to substitute more or less. But also, if you do force this, it would lead to inflation and, all these computers and broadcasting equipment stuff, these things would just go up in price massively. And then the Fed has a problem, and then the consumer has a problem. So it's very tricky business, and like Trump was saying, 100% tariffs, all this. But I think that was more of a pre-election talk. I think in the end, they will concentrate on specific parts of trade. And I think it's worth, so this data is a bit dated, like I said, but we can look at the totals, the China, US imports and exports, and it's up to date, right? And I would point you 2016 to 2020 when Trump was fighting the tariff war with China back then, right? It was a big thing. Everyone was kind of worried about this. But in the end, China's exports grew over time. So I would say they didn't work, those tariffs didn't work. And if you look carefully at this chart, the blue line is what the US is sending to China, and it's been pretty flat for a long, long time in terms of nominal sizes. Okay, you could argue that COVID had an influence, and it surely did. You could see this drawdown right when COVID started. But I'm not sure how it would be different if not for that. I'm pretty sure it would be a very similar chart anyway. And the most important part is China's exports going up, exports to US going up. So, again, it's easier said than done. I think it's very optimistic to think that suddenly this problem of chronic trade deficit will be solved just because Trump is at the helm. I just don't buy it.
Okay, so we've had like tax cuts and tariffs. They were the two angles for squashing that US debt or trying to eat into it a bit. They're probably Trump's biggest ones, right? I mean, tariff man is what I've been calling him myself for the last while because literally every conversation he's in about the US economy has been about mentioning tariffs. And he had like a story about slapping tariffs on French champagne and French wine and things like that, and Macron
Yeah.
calling him up and all this stuff. And but I mean, you're painting a picture here that it's like for China anyway, their biggest competitor, Chinese exports and industry is just seemingly really strong. So, what are the other policies then that you think would be players in his in going forward for Trump?
Well, I think deregulation is a big one, and it was a very successful policy the last time he was in charge. And, regulation is a big problem everywhere in Europe as well. Well, we are a regulated company. It's a nightmare. I could, talk for hours about that. But it's like that everywhere, and in all industries pretty much. And the regulation has been tightening and tightening. So I'm sure he'll do that
Yeah,
because
there's the Doge, right? That came out. That was announced yesterday. The Doge,
yeah,
what's it
yeah.
called? Doge fucking committee or whatever the term is. I don't know what Elon Musk and
It's Department of Government Efficiency,
yeah. Well, there's your
supposedly.
yeah.
I'm kind of worried about Musk being in it. I mean, like if you think about it, Tesla is a recipient of subsidies because they get these carbon credits for every electric car they make, which is a direct subsidy from the government. Something tells me Musk is not gonna be efficient when it comes to Tesla subsidies. So, there are all these questions flying around. By the way, Tesla, in terms of market reaction, I think it added like half a trillion in market cap
Yeah.
over the past 2 weeks, which is clearly, I mean, not rational, right? I mean, it basically the company added half a trillion because Musk is buddies with Trump. Nothing else materially changed. So, there are all these kind of weird moves in the market that are kind of worrisome, I would say. Not based on logic, anyways, just some expectations of Trump and Musk's friendship, for instance. So, but yeah, the regulation is a big one. I'm a fan of that. I think there should be less regulation overall, or at least it should be kind of logical and not detrimental to the businesses. So that's a big one. And I think that's one of the bigger reasons why stocks are going up. I think the big question, we touched on the dollar, right? And I think the big question is what is the policy on that? Because during the campaign, both Trump and JD Vance were very vocal about dollar being mispriced. And obviously, if you want companies to produce in America and to sell in America, repricing the dollar goes a long way. And I mean, repricing it lower. So, if he wants his industry to pick up, which he obviously does, I think repricing the dollar lower against other currencies like partner currencies, and we know which currencies those are. So, Canada again, Mexico, China, probably Europe should be included there. So that stimulates your production back home for sure. He's been very quiet about this, but it's very critical, as I've said. So dollar impacts everything. So that's a big question for me. That's something I'm watching out for. So energy is another one. So drill, baby, drill. But the question is, and again, it's something that he's done in his first coming. During Trump's reign, local production did increase, and he did make US one of the top producers of crude. Again, I think it's kind of this logic of, well, it worked before, let's do it again kind of thing. But the problem is that there are a lot of questions of how much oil there is to drill when talking about shale. That's one. And two, if you drill too much, the oversupply could bring prices significantly lower, and then it's your own oil industry that is suffering. So it's like I'm not the greatest expert in oil markets, but there are different estimates for break evens, so average break even prices for US shale industry, and they vary from like 50 to $60 per barrel. I think the big ones like Exxon, they have lower break evens, but I think on average it's something like 60-ish. So if it's below that, then it's your own industry that is under pressure. And also, just because you allow these oil guys to drill doesn't mean that they will go out and drill. Because if you're talking about guys like Exxon or Marathon Oil, I mean, these are your very savvy, kind of very experienced business people. They make their decisions based on, supply and demand and all that stuff, and they want to make profits. So just because you deregulate this industry doesn't mean that the supply of oil will come. But also, it's a question of how big the reserves are, because shale seems to be kind of on the plateau in terms of production. I think a few million barrels per day could be added, but not as dramatic as before. And there's also a question of grade. The stuff that shales gives US, it doesn't solve all the problems of US because it's mainly sour grade. So, they'll still have to import some. I have doubts about this one as well. And I have
It's not
doubts.
looking good so far. It's got the tariffs, tax, oil, and a few other bits there. I don't think you're too optimistic for him on
I'm
those
not
fronts.
very optimistic. No.
Is there any of them that you think that might actually he might
So
have
I
success
think,
in? The deregulation was one that you're thinking actually could be effective.
yeah, I think he could cut a lot of fat from the government jobs kind of thing. I'm sure there are too many bureaucrats out there. So that could happen. But if he does it en masse, that leads to unemployment very fast. And like if you look at the labor reports, the recent labor reports, you'll see that it was government jobs that were added in the past 6 months mostly. So, if you get rid of these guys, they go for jobless claims and.
So basically, then, like, I mean, it's kind of coming back in my mind to the tariff stuff again, because it's a question is, does he move industry into the US? And if he is talking about increasing or cutting government jobs, that so that's a workforce that's going to be there. Do those people then reorient themselves into industry jobs that are produced? Does that bring down unemployment?
Yeah.
Yeah, so it's kind of eyes on the tariffs. But I mean, another argument someone made to me before is that in China, a lot of the industrialization and the machinery is already established there. And if you're trying to, if he's trying to reorient industry into the US, it's not that straightforward to move everything and set up all these factories quickly to get going. So there's a bit of an uncertainty there as well.
Yeah.
So, but it's interesting because it is going back to these tariffs, and does tariff man actually have success here?
It could also lead to companies front running these tariffs. So hoarding some, products while they're still cheap. So, and that is kind of inflationary as well. So, everything kind of like if you think about it, everything he can try, it has pushback, like you change one thing and another thing changes and it kind of eliminates all your
Yeah, it's
goodwill.
it's a big equation of different parts. Yeah.
Very big, very big. And I also think you're very optimistic about government guys going into factories. I
Oh
think,
well, look,
I mean,
I mean,
it's good on paper, but in reality, I mean, I doubt they're very productive.
don't believe you that public service jobs, that public service workers who are pretty secure in their jobs generally and have pensions and so on. I don't believe you that they won't all suddenly reorient to working in metallurgy factories and things like that in the middle of Central America. I don't believe you, Paul. I mean that,
Okay.
who would be that difficult? Who would be that awkward?
Yeah, just educate them, right? Just train
Yeah,
them.
that's it. Yeah, yeah.
Easy, easy peasy.
Easy peasy.
What you say about factories is true. We had Biden had his CHIPS Act, right? So there are a lot of factories being built, and the delays out there in the open. Some of them are doing okay, but overall it hasn't been a success because it's such a long process. Yeah, so I think the Bitcoin thing is interesting. We promised we'd touch on that. I actually have an explanation for this one, why he suddenly is pro Bitcoin. Because he was very vocal about he not understanding it and that it's nothing and blah 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 years ago. But in his campaign, he went to this Bitcoin conference and said a lot of things of how the US should have a Bitcoin reserve and all this stuff. And actually, it's not that difficult. They don't even have to buy the Bitcoin because a lot of Bitcoin is seized from, criminal activities. All they have to do is just keep it and not sell it, I guess. But I think it's bigger than that. I think the idea is that because you have Bitcoin and you have Tether, you have USDT, right?
Uh-huh.
And USDT is what they call a stable coin, but the premise is that they get this money into this coin, into this USDT, and they allocate this money into safe assets like US Treasuries, right? So theoretically, the bigger the Bitcoin market cap, the more demand there is for treasuries, because at some point, some part of the Bitcoin crowd will go into Tether and by definition to US treasuries. So, with the debt being so high and probably with the need to issue more being, fairly realistic, this could create extra demand for US treasuries at a time when, the supply is getting bigger and bigger. And I think that's the idea. Well, whether this idea will work or not, I highly doubt it because it seems like one of those things when you're trying to create demand out of nowhere. And I don't think that just by establishing a reserve, it pushes everyone in the world to buy it. It's kind of, well, you do it then. And for me, again, I did mention that for me, it's closer to tech kind of industry than currencies or commodities or something like that. So to me, this sounds like the same as, well, let's buy Apple stock for our strategic reserve, and then everyone has to buy it too, and the market cap goes up. It's a little bit different from if you're a central bank, it's a little bit different from holding physical assets like gold, oil, or other metals. I think it's a big, big stretch. But I also think it's interesting that they're going this way. It could be a sign of, problems with the demand for treasuries. And that kind of brings us back to the issuance. And by the way, I think that issuance is going to go up no matter whether, the economy is experiencing a slowdown or not. Even if we just stay where we are in terms of growth rates and stuff, I think it's still more issuance. And in that sense, I'll just show this one last chart, and it's a chart of key foreign holders of US Treasuries. And it's a bit messy. There are like four lines, and the blue one is Japan, the white line is China, and these are the two biggest foreign holders of US Treasuries. So Japan is the biggest at 1.1 trillion right now. And I've added Canada and Mexico, but they're much smaller in size. So the point of this chart is just to show that the two biggest foreign holders of US Treasuries, they haven't been buying. Japan is kind of flat from 2014, and China has been decreasing their portion of US holdings massively. They are below 800 billion right now, and I think they're rolling off even further. So, there's not a lot of demand from foreigners on the central bank side, at least. Obviously, private individuals and corporates are buying, but the big ones are not. And I think that's part of the reason why Bitcoin kind of came in as this idea. And I think that's the reason why he's so insistent on the Bitcoin stuff. But we'll see. We'll still have to see what happens in that respect. But I think it's interesting.
Okay, so we've gone through a couple policies there on what he's doing. I have one question for you because we've covered a good range again today. I think we've probably exceeded our time that we planned on doing once again. So that's something we have to work in our podcast going forward. But maybe I'll make this a two-part question. What policy area, if you were in Donald Trump's shoes, would you think he should hone in on and focus on? I know it's a multiple choice question, so I had a feeling you were going to tell me that as a response. But if you had one thing in this kind of array of policies that you think would be the most impactful, what one would you pick to focus on and really hone in on if you were in the Donald Trump shoes? And then the second question is, which is going to have the largest downstream effect, if this question makes sense, which would have the largest downstream effect to Europe and maybe even Ireland or Latvia in its context? What do you think?
Downstream, you mean bad? You mean
Yeah,
like,
like bad or good or like, if
okay, just as a consequence.
yeah,
Okay.
as a consequence. Yeah.
So I think Trump is a negotiator, unlike Biden, for instance. So he's a deal maker, he's a negotiator. And I think the best way to approach these kind of inconsistencies in trade and local production would be to come to some sort of an arrangement globally. And it has been done before. We had events like Plaza Accord, which were all about the dollar and its pricing and relative cross rates and, interest rates. So I think that has to be done. And I think the currency side of things would be the most impactful. And I think eventually this is exactly what we're going to have, what we'll see and what's going to happen. I just don't see how, aggressive tariffs would influence China to change their way of doing business. There's no good reason for them to do that. And they are reacting already in terms of, restrictions on minerals, tariffs as well, all those things. They have a lot of power in that sense. And every economy, every trading partner can do something in response. So it has to be agreed upon with key economic powers in the world today. And I think he can do it, by the way, and I think he will do it. So in terms of Europe, well, I think Trump is good for Europe generally. Maybe not on the tariff side, but I think in terms of negotiations, in terms of geopolitics, I think his rule is going to be more honest, more kind of business-like, which is something we all need, I feel. Less ideology, more business, more economics. And I think he's the guy to do that. So I don't know if it's a valid answer. Because like it's to seriously discuss impact of policies on Europe, you have to see policies first. Right now, all we are discussing is some ideas, right? But given the way American politics and economics work, it's a difficult process to get these things passed in Congress. And also, as we've said, the state of the economy is super important because if we have a slowdown of any type, all these ideas becoming harder and harder. I think that's a big assumption that the economy will be doing as well as it has in, say, 24.
Okay, that's a fair answer because you're not Donald Trump, and
Thankfully.
not many people are. And
It's a big
well,
job. It's a very difficult job for him.
yeah, and there is only one Donald Trump, so
Only one.
we have to see the way things fall in the next few months. But I think that's a pretty good breakdown, a pretty great breakdown of the different areas that he's looking at and the different policies and what ways they could move. Obviously, the conclusion, I guess, would be that he has it a little bit stacked against him, and the US have it stacked against them, regardless of who was elected, because the US economy is carrying a lot of burden and a lot of debt and a lot of systemic issues. Yeah, I mean, he's definitely going to cause a bit of chaos anyway, and who
Yeah.
knows what can come from that.
Hence the expectation, my expectation of volatility picking up.
Yeah, that makes sense. Yeah.
Yeah.
So good time for volatility traders.
Yeah, I
Yeah.
guess.
Okay. Is there anything else we need to cover, do you think, today? Or
No, I think we've covered a lot. So yeah, I think we should wrap it up.
yeah, okay. Well, look, thanks a lot, Paul, again for this discussion, and hopefully people listening gained something from it and enjoyed the discussion. And yeah, obviously we have I haven't looked at the clock, but I think our timing has exceeded what we planned again today. So to do that's on the to-do list, work on. But
We'll learn at some point for
yeah,
sure.
it's also a sign of how much information we're getting across, right? And how interesting we are. That's what's going on here.
Yeah. We'll try to do better. We'll try
Yeah.
to cut it down.
Okay. Yeah. Sounds good. So yeah,
All right.
thanks for that, Paul.
Thank you. And we'll do it again maybe closer to year end or maybe just in the beginning of 2025. We'll see.
Yeah. Okay. Thanks, Paul.
Thank you.
Bye now.